The Reserve Bank is under pressure to end its interest rate hiking cycle after inflation last month was lower than expected. A major court ruling means all employers now must ask staff to work public holidays rather than just rostering them on. And from the world of the rich and famous, the court battle between actress Gwyneth Paltrow and a doctor about who ran into who on the ski slopes. It's Thursday, the 30th of March, 2023. Welcome to Fear and Greed, Australia's most popular business podcast. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, after the show today, you have an interview with David Anderson, co-founder and CEO of Big Red Group, which is the parent company of brands that we all know, Red Balloon and Adrenaline as well.
It's been a really tough couple of years for these companies that retail experiences. And so we talked to David all about how Red Balloon and Adrenaline has gone, what's happening in the market, and it bounced back really well. So it's a fascinating chat with David about what's going on.
Yeah, it's a good one. It's coming up a little bit later on. The main story this morning, though, Sean, is a big one. The pressure is on the Reserve Bank to not lift interest rates when its board meets next week after inflation figures came in lower than expected.
Inflation last month came in at 6.8% for the 12 months to the end of February, down from 7.4% a month earlier, and importantly, below market expectations. The Bureau of Statistics figures pretty much confirms that inflation peaked late last year. The question now, Michael, is how fast will it come back to the Reserve Bank's 2 to 3% target range? Wages growth is running at more than 3% per annum. Now, not a bad thing, but certainly that will feed into inflation. But AMP's indicator of pipeline inflation includes commodity prices, shipping rates, price surveys, producer prices, and advertised salaries. It shows, according to economist Diana Messina, that things are slowing significantly. Rates have been hiked to cut off inflation, and it looks like it's working.
So then, Sean, yesterday's numbers going to be enough, do you think, to convince the Reserve Bank board to not lift rates next week?
Well, that's the $64 question. Inflation is one of four key variables the central bank has nominated as being critical to its decision-making. So the inflation figures yesterday probably gives the Reserve Bank a reason to wait before moving on rates. The second one they're looking at is business and consumer sentiment and conditions surveys. Consumer sentiment is very low, though business conditions are okay. Number 3 is the labour market, and that is unequivocally strong. And the fourth is retail sales, and spending has certainly lost momentum over the past 3 months. There's another issue that's come to the fore in recent weeks, the banking crisis in the US, and that definitely works against further rate hikes.
Sean, you mentioned that was the $64 question. Do you reckon that question is the only thing that has been immune to inflation? Because surely that should be like the $70 question now.
Yes, it's a good point, because I think the $64 question came from a TV show, probably from the 60s, I'm guessing.
So really, that would be kind of the, $4,000 question now, really.
Yeah, I think so.
Now, Sean, back on topic.
Mm-hmm.
I know it's a slight detour, but if the Reserve Bank board does pause rates next week, it will be the first time in 10 board meetings that they haven't lifted.
Yes, the official cash rate has gone from 0.1% to 3.6%, pushing standard variable loan rates for home borrowers from 2 point something to the high sixes. I think most of us would be pretty happy if the Reserve Bank takes a breather next week. Certainly a few market economists yesterday changed their mind. The market economist from Citi, same with RBC, they actually said after yesterday's data, they thought that the Reserve Bank would go on hold. Be nice, Michael, hopefully.
Yeah, it was a pretty significant development yesterday. How did local markets respond?
Well, the bourse jumped immediately after the 11:30am announcement, recouping earlier losses. By the end of the day, the S&P ASX 200 was up 0.2% to close at 7,050 points. The materials and energy groups did best, while real estate stocks fared worst. Fortescue Metals jumped nearly 3%. That was the best of the large caps. Woodside Energy rose 2.6%. BHP was pretty good, up 1.4%. Worst of the large caps was National Australia Bank. It fell 2.2%. ALS's share price jumped nearly 5% after the testing and certification company said it had sold its asset care business and upped its net profit guidance for the current financial year. Other companies to do well yesterday included Deterra Royalties, that's basically a collection of mining royalties, that company, and manufacturing group Reliance Worldwide. The coal companies Whitehaven and New Hope, as well as lithium group Core Lithium, were among the worst performers of the top 200.
All right. What about international markets?
Well, the inflation news locally pushed the Aussie dollar lower. It fell underneath 67 US cents, which is around where it's trading now. In the short term, the Aussie dollar moves up and down in part on the back of interest rate expectations. If the chance of a rate hike falls, then that puts pressure on the Aussie dollar, and that's exactly what happened yesterday. Not a lot going on in commodity markets this morning. Brent crude is up a bit over the past few sessions. Cryptos are also slightly higher, but I must say, I'm quite enjoying just a little bit of normality in financial markets, Michael.
Yeah, it's a pleasant change, isn't it?
Very pleasant.
All right. There is still a bit going on. We'll be back in a moment with the rest of the day's business news. Sean, employers must ask workers if they want to work public holidays and can't just automatically roster them on, according to a landmark court ruling that will apply to all workplaces, regardless of what's in contracts or agreements.
The full federal court judgment comes just days before the Easter holidays and held that BHP's internal labour hire outfit, called Operations Services, breached the Fair Work Act by requiring miners to work on Christmas and Boxing Day, according to a report in the Financial Review. Now, the ruling is a major win for unions and could expose other employers to civil penalties, including in sectors, resources, obviously, but logistics, retail, hospitality, health, emergency services, if they automatically roster their employees on public holidays without asking them. The ruling affirmed that the National Employment Standards overrides contracts, awards, or enterprise agreements. Now, those standards mandate that employers must make reasonable requests to work public holidays. This is a major shift. If you're an employer and you want to roster someone on a public holiday, you now have to ask them.
Oh, that is a big change. Big change. Sean, the next story is related really to our main story this morning. The federal government is effectively backing an inflation-matching wage rise for the nation's 180,000 lowest paid workers.
And based on yesterday's numbers, that's a whopping 6.8% wage rise. Now, Prime Minister Anthony Albanese said the government's annual submission to the minimum wage review by the Fair Work Commission will be consistent with the values from last year. You might remember the brouhaha during the election campaign when Albanese was asked if he'd support a wage increase in line with inflation, i.e. no cut to real wages. He said yes, and eventually the 180,000 lowest paid workers got a catch-up 5.2% increase. I think low-paid workers should get a decent bump. No problems with that. However, it can flow through to the rest of the economy, triggering the dreaded wage price spiral. Higher wages means people push up prices even more, so it's a tricky one.
Good on you for using the word brouhaha, though.
Thanks, Michael. I didn't expect that from you. I expected quite the opposite.
But I was wary when you said you might remember the brouhaha, and I'm like, oh, that's a big call. I barely remember anything that we discussed earlier in the show, let alone something that we discussed nearly 12 months ago.
Oh, Michael.
High risk stuff, Sean.
High risk.
Now, still in Canberra, the Senate has passed the $15 billion National Reconstruction Fund, which the government says will ensure the future of technology and manufacturing in Australia.
It's a bit of a legacy from the COVID pandemic. Many countries, including Australia, suddenly realised the need to improve supply chains and the need to locally source products. This fund, and Michael, let's face it, this government seems to have announced a few funds. Anyway, this one aims to help the local manufacturing sector in a bunch of priority areas: renewables, medical science, transport, value-adding and resources in agriculture, forestry and fishes, defence and enabling capabilities such as fintech. The other thing which I think is really interesting about this fund is it kind of is a response to this massive spend going on in the US in their Inflation Reduction Act. The Inflation Reduction Act, which is worth hundreds of billions of US dollars, pays incentives for people to make better environmental decisions. Greener energy is the obvious example there. And plenty of companies, BHP included, are looking at investing in the US as a result. This kind of, in a funny little way, is a response to that. I've gone off on a tangent there because I just think it's really interesting.
Before you go too far or away from that tangent, why is it called the Inflation Reduction Act?
It's a misnomer. Well, the whole idea, I suppose, is that you are helping fund investment in energy particularly, which will reduce the cost of energy, which will reduce inflation. But that Inflation Reduction Act is one of the most significant pieces of legislation in the US in decades for business. That's not overstating it. It's quite incredible how much money they're giving away and how many global companies are now thinking, maybe we should invest in the US on the back of this.
In that case, it sounds like it needed a grander name, Sean.
Yes, probably.
I will work on that one.
Okay. Just quickly, also yesterday, Albanese blamed the Greens of placing politics over principles after Labor lost a vote in the Senate on its signature $10 billion affordable housing fund. Yes, another fund.
The Big Spend Act?
The big even that's not big enough. Like, it's kind of got to be, Changing the World Act 2023.
Oh, that's big. Oh, that actually inspires me, Sean. I think you've done it. God, you're an ideas man, aren't you?
I'm an ideas man.
Sean, serious one, very serious one. Paul Brereton, the New South Wales judge who led the investigation into alleged war crimes in Afghanistan, will lead Australia's first National Anti-Corruption Commission.
Why is the National Anti-Corruption Commission really serious? I mean, it's a bit of a laugh, wouldn't you think?
There's very little light about this one, isn't it?
No, I mean, some of those state corruption commissions, they've always been vaguely humorous in what they've caught politicians doing.
You are right that often there is some quite scandalous stuff that comes out of it, and it can often have a little bit of kink to it.
Yeah. I know exactly what you mean, but I'm not going down that path. Let's go back to Mr. Paul Brereton. He's a serious fella. I mean, Attorney General Mark Dreyfus said Brereton, who's a member of the New South Wales Court of Appeal, will take up the job in the middle of the year. He's 65 years old. He also carries the rank of Major General in the Australian Army. He first enlisted, I think it was 48 years ago, and he's still a member of the reserves, which is pretty cool. The National Anti-Corruption Commission was promised by the Albanese government in the last election campaign. Remember that one, Michael? Perhaps not. Brereton will serve a 5-year term.
ASIC is investigating whether the Australian Stock Exchange, including its executives, breached obligations in the oversight of the CHESS replacement program.
I think it's not being unkind to say the CHESS replacement project was an almighty stuff-up.
Oh, I didn't know what you were going to say just then.
It was just a disaster. Now ASIC will investigate whether the ASX broke laws relating to director responsibilities over public statements issued by the company in relation to the Trouble project. Eventually it was cancelled. The ASX has taken write-downs of about $250 million on the project already. Clearly it's got some more legal costs coming on the back of it. In the months before the project was abandoned, ASX told shareholders that it was on track but had been delayed. That's the really sticky point for the ASX. It's pretty humiliating for the equities market operator to be investigated for potentially breaking the equity market rules. The chair is a guy called Damien Roach. I've noticed the Financial Review is on a campaign to get rid of him, saying he should step down. The CEO at the time was a guy called Dominic Stevens. He has stepped down already. I don't think Damien Roach will survive this.
Sean, property giant Meriton has suffered a data breach. It was back in January, and the stolen data included information such as bank details, birth certificates, and employee-related details on staff and guests.
Of course, Meriton is owned by billionaire Harry Triguboff, the 6th richest Australian. It develops and sells apartments. It also operates serviced apartment accommodation. Now, Meriton joins a growing list of companies that have been breached, including Latitude Financial, Medibank, Optus, and plenty of others. More than $569 million was reported stolen in scams last year, Michael, but it probably only represents about 13% of the actual figure. That's from a comment that the Australian Competition and Consumer Commission Chair, Gina Cass-Gottlieb, made earlier in this week.
And Sean, Queensland has fallen into line with Victoria and New South Wales, criminalising the display, distribution or publishing of Nazi, Islamic State or other extremist symbols.
People who do so will face up to 3 years in prison. Tasmania and Western Australia also intend to criminalise the display of Nazi symbols. The Queensland ban includes social media, and the new legislation increases penalties for crimes motivated by racial, religious, sexual or gender identity hatred. They'll also give police the ability to access stored communications such as phone records when investigating a case of serious vilification.
Sean, in international news, this is a big one. One of China's most successful companies, online commerce group Alibaba, plans to split into 6 units, raise capital individually, and potentially IPO individually as well.
It's the biggest overhaul of the $220 billion US company since its inception 24 years ago. And the shift to a holding company structure is quite rare for a major Chinese tech firm. Now, the announcement sent Alibaba's share price up 14% yesterday. Decentralizing the company's business lines and decision-making power addresses one of Beijing's main concerns during its sweeping crackdown on the technology sector, basically too much concentrated power. The announcement yesterday coincided with the return of billionaire co-founder Jack Ma to China. He spent the last year abroad and no one really has seen him, though he was actually spotted in Melbourne just a few weeks ago, Michael.
Yeah, that's quite a celebrity sighting, isn't it?
Yeah, Jack Ma, that's big time.
It sure is. Now, White House National Security Advisor Jake Sullivan spoke with China's top diplomat Wang Yi last week as the two sides look to ease tensions that have continued to build in recent months.
Yes, it's good that they're both talking. The call took place days before Taiwan's president was scheduled to stop in the US en route to Central America. That's a trip that's likely to further inflame Beijing's ire, according to Bloomberg. The official contact comes as the US administration is looking to arrange a phone call between Joe Biden, the president, and Xi Jinping, China's president. US officials had hoped the call would have taken place by now, but China so far has rebuffed efforts to arrange a conversation.
Finally, Sean, I suppose it hardly fits really into the business basket, but it's such a good story about people with probably a little bit too much money. Actress Gwyneth Paltrow is being sued by a skier over a collision they had at Deer Valley Resort in Utah while skiing back in 2016.
Now, Michael, the trial has gone on for 6 days, and let's take this seriously, please. It was due to wrap up this morning, Australian time.
Hang on, you say that this story needs to be treated seriously when I was criticised slightly for suggesting that the National Anti-Corruption Body was a serious story.
Yes, well, this is really serious.
All right, please go on.
So, retired optometrist Terry Sanderson is suing Gwyneth Paltrow for at least $300,000 in damages for allegedly running into him while skiing. Paltrow has countersued for $1, and attorney fees, of course, claiming Sanderson ran into her. The critical point here, Michael, and I don't know whether you're a skier or not.
I'm a bad skier, yes.
Right. Well, so who was skiing uphill and who was skiing downhill? Kind of, the unwritten code of skiing. If you're above someone on the ski slope, it's your responsibility to not knock the person who's down the hill from you. The big argument is who was uphill and who was downhill. Now, the problem, so the Mr. Sanderson allegedly has had health difficulties from it. One of my favourite lines in it was Gwyneth Paltrow was asked, how's this affected you? And she said, well, I lost half a day skiing from it. Seriously. Suing someone over a ski accident. Michael, the world has gone mad.
It absolutely has. And that is a completely ridiculous story, but it is too good not to discuss.
The other thing I just don't quite understand is they talk about Gwyneth Paltrow now being a lifestyle influencer and a vagina egg merchant.
I'm sorry. Hang on. Sorry, what?
Vagina egg merchant. Basically.
Oh, this is high risk stuff, Sean. Please go on.
These are egg-shaped jade or quartz. Sold through an organisation called Goop, which is her new age wellness company and lifestyle brand.
Mm-hmm.
Do you want to know any more details or not?
All right, up next is the Fear and Greed Daily Interview. And Sean, your guest today is David Anderson, co-founder and CEO of Big Red Group, the parent company of Red Balloon.
Yep. David, talking all about the world of experiences, how they've gotten through the pandemic and where to for now.
It's coming up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Quick nomination, Sean, for our Mia, our most enthusiastic advocate. The Mia suggestion for today is a listener by the name of Lisa. She is a Brisbane-based chief financial officer. She's been listening to our podcast since we started.
Lisa.
And she has also now started listening as well to How Do They Afford That, which is our sister podcast. And a new episode came out yesterday. And that episode is all about the kind of the traps and the risks that you need to be aware of if you are thinking about refinancing. And there's a lot of people that are thinking about refinancing home loans as they kind of roll off those low fixed rate loans onto a higher variable rate loan. So that's well worth having a listen to. But thank you, Lisa, for listening and for spreading the word about fear and greed. Thank you very much, Sean.
Thank you, Michael.
It's Wednesday, the 30th of March, 2023. Make sure you're following the podcast. Join us online on LinkedIn, Instagram, Twitter, and Facebook. And don't forget that you can stay up to date on all the business news with Alexa and your Amazon Echo smart speaker. Simply say, Alexa, play the Fear and Greed podcast to catch the latest episode. You can get yours at amazon.com.au. I'm Michael Thompson, and that was Fear and Greed. Have a great day.